Getting pre-qualified or pre-approved is just the beginning. In this video, I'm going to run through the whole process. Once you find your home, you make the offer. Now let's look at the loan process. My name is Halbert. I'm a mortgage broker here locally in Queen Creek, and I service all of Arizona, and let's dive into it. In Arizona, there's something called a pre-qualification form. In other states, they call it a pre-approval, but we call it a pre-qualification. And what it states is that the lender, hey, you talk to a lender, this is what you're pre-qualified for. So what happens with that pre-qualification form? You sign it. I sign it. The lender signs it. And then we give it to the real estate agent. Your real estate agent then uses it to go make an offer. So as you're out there with the real estate agent, you find a home. You're like, oh, this is the house. It's beautiful. It's got this 3 bedrooms. It's exactly what I want. It's the color I want. I don't even have to paint it. How nice is that? You could then use that pre-qualification, you attach it with, well, the real estate agent does. They attach it with the offer that they present. That way the seller can see, oh, okay, this person talked to Jared. They're pre-qualified. We're cool. Let's say you get the offer accepted. This is the cool part. Now we're going to dive into it. Your offer's accepted. What are you doing now? Okay. And I'm going to share the lending side because on the real estate side, there's still stuff you need to do, like an inspection, some other things with the real estate agent. But on the lending side, that's where I'm able to really officially start the loan, okay? From the real estate agent or from you, I'm going to get the purchase contract. The purchase contract states all the details that you guys agreed on, right? Let's say the purchase price. Let's say if there's seller concessions. Let's say there was a back and forth counter offer. All of that I get to see and then put together the application for you to sign. After you sign the application and disclosures, now the fun starts, okay? Now we ship it off to the underwriter. Underwriter's job is to look through it and see, is there anything in here else that we might need? Some things that they're going to need are from you. Some things they're going to need from me. Some things they're going to need from the title company. Some things they're going to need from the appraiser. So there's a lot of different variables that the underwriter is now collecting. So the underwriter works for the lender, right? And they're now collecting all this to make sure that this paper that they're going to say yes and get approval on for you, that they can later sell it. So that's why they're asking all these questions. That's why they want to see so much. They want to be able to sell that paper to Fannie Mae or Freddie Mac, or, you know, if it's an FHA loan, then to Ginnie Mae. They want to make sure that they can resell that loan. Some of the things they might ask for, another pay stub. You know, they might ask for updated bank statements. They might ask for, what was this large deposit in your bank statement? They might ask for a tax return, another tax return. And so there's things that they might ask for, and you got to be aware of that. So the lender, you know me, I'm going to come back to you and say, hey, we're going to need this and this. This is what the underwriter needs. And sometimes we give it to them, and it opens up another door, another question, right? And so just be aware that it is a process. It's not a quick, boom, we're done. And that's why a lot of times when you go under contract to set it up for a 30-day close, you know, we can typically do them a lot faster than that. But just be aware, that's why, because there's different things that can come up. The other thing that's going to come up is the appraisal. We need to get an appraisal done during that time. So we're going to reach out on the lending side. We're going to reach out to the appraisal team, and we're going to get an appraisal ordered. And that appraisal, sometimes you're going to pay for it up front. Sometimes the lender's just going to roll it into the closing costs. That totally depends, too, on the lender and different scenarios. But just be aware, there's an appraisal that's going to be ordered. So that appraisal is different than the home inspection. Home inspection typically means that they're going in and looking at the house. Okay, is the roof good? Is the floor falling through? Like, they're going to look at all those little details. That's the home inspection side. But the appraisal side is, what's the house valued at? So they go out and they look at all the homes in the area, different comparables, you know, within the last 6 months, what's sold in the last 6 months. And that's how they are able to figure out what that house is worth. The appraisal is paid by you, but it protects the lender. It protects you too, because it gets you an idea of, is this house even worth what I'm, offering here? But the lender gets protected too, because it's the only person that they have that goes out and looks at the property. There's times you're not going to have an appraisal. If you put 20% down, there is a possibility we could get something called an appraisal waiver, where you don't have to have an appraisal done. And that's okay too. Doesn't mean you can still order one. That's totally up to you. I have clients that may still want to order an appraisal just to know. Most don't, but some might. So just be aware of that. It's totally up to you. If you still want an appraisal, you can still pay for one and get one. Another thing that takes place during this time, besides the appraisal, is the title work, okay? So at the very beginning, you're going to choose a title company, and that's usually on the purchase contract, who the title company is going to be. And that title company's job is to make sure that the title is clear for you as a new buyer. So they're going to go through and they're going to, do all the homework. Hey, they got to make sure this person's is their house. They got to make sure, are there any liens on the home? Let's say 6 months ago, somebody, they put in a new pool, or I guess people don't put in a new pool and then move. That was a bad analogy, but let's just say they painted the house and they never paid the painters. Well, the painters could come back and they could put a lien on the house. And then when you buy the house, it could be stuck on you. And so what title insurance is to cover you. In case that does happen, you're covered. Where they'll be like, oh, I have title insurance. I bought title insurance when I bought the house. And that's what covers you from having to pay that painter. And there are stories about this happening. But as long as you have that title insurance, which when you buy a home, you almost always get title insurance, and that's what it's there to protect you. And that's why you pay the title company. It's protection for you. Another thing that in Arizona, title companies are also escrow companies. And so we have they're the third party. They're the ones that are going to ask you for the earnest money. When you start off, they're going to say, hey, you just went under contract. On the contract, it says you're giving them $3,000 in earnest money. Can you get that to us? And they're going to take it. They're going to stick it in a safe account because they're the earnest company, which means they're going to hold that money separately. They're the third party, and they're going to hang on to it. And at the close, the title company's job is to make sure they get the money from the lender, they get the money from the seller. If there is any extra money that they owe, they take the money from the buyer, the down payment, and they put it all together, and then they make sure that all the money gets distributed where it's supposed to go. That's their job as a title or escrow company here in Arizona. So as we get these things done, we get the appraisal done, we get the title work all finished up, and we get all the extra pay stubs or whatever else we might need from you. At that point, once we're done, the underwriter looks at it all and decides if it's clear to close is what it's called. That's why they say clear to close in the industry. That's exciting news. It means that the underwriter looked at everything and you're good to go forward towards closing. So are we done yet? No, we're not done yet because you still have to sign a bunch of paperwork. Lately with technology, the signing's been faster and easier because you can do it from home, part of it from home. Some of them you could do completely from home. But there are some documents that at least I like for my clients to go into the title company and sign. When I say go into the title company, sometimes it's inconvenient. Sometimes they're out of town. Sometimes we need to get a mobile notary. Mobile notary will meet you wherever you are. Let's say you're visiting your aunt out in Maine and oh my gosh, it's closing time, but I had this thing planned in Maine, and I'm going to be there for, a week. That's okay. We'll send somebody out, sign the papers, give them 40 minutes of your time, sign the papers. They'll come back to us and we'll still close it. So don't be nervous of going out of town or being out of town. That happens. Just let your lender know because we have to know and the title company has to know so we can schedule that signing at the end. After you sign, is it done? It's still not done. So you sign the paperwork, you send it back to the title company. They still have to record the loan. And so once it's recorded with the county, that's when it's officially yours. That's when you get the keys. That's when you celebrate. That's when it's super exciting. But yes, there's a lot of work. And that's why I wanted to explain this. There's a lot of work going through the loan process. Having a loan officer who understands the process and makes it easier for the client, makes it easier for you. That's what you want. And so it's nice to have a loan officer who puts things in a simple way. So that way, okay, this makes sense to a regular person who doesn't talk mortgage every single day. Now, here's a kicker. Here's one thing you want to focus. When you're going through this whole loan process, things you do not want to do. You don't want to go look for a new home. You don't want to go look for a new home. That is a big one. I have clients who are under contract and still sending their real estate agent other homes to look at. And that can be bad. because it's just showing you're not committed to that one house, which that's fine. If you don't want that house, you shouldn't have made an offer on it. What you don't want to do is open up a new line of credit. New line of credit meaning, let's say you go buy furniture and they say, hey, if you buy this furniture, you open up a new card, it's 0% interest for 6 months, and you're like, oh my gosh, that's a great thing. It's going to be cheap. Let's do it. You don't want to do that. You don't want to buy a new car. You don't want to change jobs. You don't want to change income. Those are things you don't want to do. Lenders do check credit at the end. They always will do a final check of the credit. And if there's a new line of credit on there, it's going to trigger it and they're going to ask about it. And you're going to have to show documentation about it. Don't spend your down payment. It's sitting in the bank. Don't start using that account a bunch. Kind of leave it separate so it's ready for the closing. I try to make my client's job as easy as possible. And so just be aware, there might be some times, and I usually have a heads up, like, hey, and I usually give my clients a heads up. Hey, this is going to be a tough one, so hang in there. Most of the time it's not. You understand the process, you get the simple layout, but sometimes things are complicated. And usually those borrowers know they're complicated and they're like, okay, I understand. This is going to be a little bit of a ride. And it happens. But my job is to let you know what's happening next and to keep you informed throughout the process all the way to the close. When you get your keys, that way you're excited. You leave me a 5-star review. Life is good. And we celebrate. And you refer all your friends and family to me. But in all reality, if you have any questions, please reach out. That's what I'm here for. I don't want people to ever feel overwhelmed either. So just reach out, ask any questions. Whether you're planning on buying now, whether you're planning on buying 6 months from now, a year from now, I'm here to help. I'm Jared Halbert. I own a company called Brick Mortgage. It's a local mortgage broker here in Queen Creek, Arizona. Again, we service all of Arizona. I have clients all over in the White Mountains. I have them down in Tucson. I have them all over in the Phoenix area. So I'm here to help, and we'll talk later. Bye.
I can send it up. Check, we broadcasting. Ain't nobody ask, we splashing. Beats that have boom, now we moving massive. Breaking you down in the bass, spitting acid. I'm back in my zone, the top gun of the Maverick. Like